Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. There were a couple people who reached out that still need the spooky discount code. I still have it open. You've got one last day. This is it, guys. And it's done. So today is the last time. If you want to sign up for a yearly membership at the discount, put it in the comment, or it's in the description link to see what that discount is. It is the last day today. So I opened it up for one last day. Let's dive in. Let's take a look, and I'll give you my financial opinions on the market that we've got going on right now. So we've got the DXY. I'm looking on the right-hand side. I see yields are a little bit weak. What I am guessing is that this dollar could start to move sideways to slightly lower if yields are to sell off. That's what I'm going to guess. Now, again, this is the difference here in the DXY is you're measuring relative strength and relative weakness. So it also depends on what the Japanese yen and all those other currencies are doing and how strong or weak their monetary policies are as well. So we look at yields. The 2-year yield is dropping out below that support. Let's see if there's any follow through over the next few trading sessions to see if we're actually going to go lower on the 2-year. The 2-year is the lower end, and if you can see, we are getting a little bit of selling pressure. Are we going to pull back? If we pull back in rates on the longer end too, I'm seeing they're pulling back here. It's going to be, in the beginning, stimulative for the stock market and also for the housing market, as rates potentially could come down. We've got everyone piled on the short side of rates, so we could see this sell off. Now, if that sells off, I think it's going to be a very interesting ride to the upside for precious metals. That's my take on it. TNX, it does look like we could see some further selling pressure to the downside. You can see the red army. We have 3: bearish engulfing, bearish engulfing, bearish engulfing. Now, to me, this definitely looks like a topping pattern. This definitely looks like we could go lower in the short term. The sustainability of the move, how big this move is going to be, we'll find out by the selling pressure that we see in the markets. Now, yields coming off like this, sometimes it means that potentially we could see a slowdown in the market. Again, it's favorable for precious metals. It doesn't mean that energy will go down or anything. But there's times where when the Fed holds rates steady, we could see yields kind of come off a little bit, which we're seeing. And it looks like that could continue in the short term. TYX also getting some selling pressure here. So we're getting a little bit more information from the market. And to me, it looks like we could go down in the short term. How big it is, the move and all that, we'll find out. I'll just say it. We'll find out. TYX, TNX ratio also moving up, which is favorable for gold. Now, if this continues to move up, if we see yields continue to pull down, we see the yield curve uninvert to some extent between the 10 and the 30, which we did today, we'll see this move up, and that has a high correlation with gold moving up, and silver and platinum, etc., etc. TLT bond prices is doing the opposite of yields. It is moving higher. And it does look like we could potentially move on up after today. Powell saying he's not going to raise rates. We could see some relief in bond prices and yields coming back. So looking at the sectors themselves, gold, I know it was down a little bit today, down $7 an ounce. I think that gold looks very good. And with the recent developments in interest rates and the recent development in bond prices and dollar, we could see a big move here in gold. And that is where I would focus some of my efforts, is in the precious metals region. So gold looks really good. We're sitting on top of support. We don't have too much selling pressure here, and I think we could explode to the upside. These guys are going to try to hold this thing down. These guys being the Federal Reserve, JP Morgan, they're boys. They're trying to hold this thing down because they're trying to hold the commodity complex down. They do it through the price of gold, silver, and platinum. These are the most heavily shorted three markets in the metals, or in the markets, period, or the gold, silver, and platinum. Silver also up against some resistance. I think that we could potentially break and we get above 25 bucks. I think it'll be party time. We're not there yet. I get it. I understand. And I still like where it's at in terms of the physical metal. I think this is a great opportunity. I'll just say that. Platinum also has broken out of its downtrend line. It's doing its return move right now. I like platinum. Platinum looks fantastic to continue higher. Palladium down a little bit today. This is the out of favor metal. And I do think that we could go a little bit lower, maybe down to low 900s maybe. XAU to gold ratio, the gold and silver mining companies still struggling to make a profit, which makes me even more bullish on the physical metals because silver, some of those guys, their break-even points are in 22, 23, 24, 25 bucks. And those are existing infrastructure in place mines. So the silver physical metal is, I think, a no-brainer, but XAU to gold, they're still underperforming. The gold and silver mining companies, they are still underperforming. Now, is this going to be the slingshot that we get? Very well could. We'll see if it slings higher. CRB index down a little bit. I think oil was down a hair. Yep. And are we carving out a consolidation pattern? It kind of looks like it. But we're down a little bit there. CRB index down against the S&P. The S&P likes no rate hikes in the beginning. It likes it. I don't know about when things start selling off, and I don't think it'll like it. But so we were coming down a little bit there on the ratio. GDX right up against support, resistance. Right up against resistance. Is this a flag pattern that will eventually break? That's most likely the case. Yes. GDXJ. Another one that's just kind of hanging out there longer term. We're still in this kind of like big basing pattern. We haven't broken out yet. Could this be a sign of manipulation starting from this point in 2020 onward? Sure looks like it to me because how can you be running the deficits that we are in the metals, have low inventory levels, and all of your mining companies can't make any money? Kind of weird. SILJ also very low down here. And we do have resistance above us. We were down today 0.9%. Crude oil moving sideways. We're right on support. We've got lots of support in the general location of where we're at. Is there, what's going on with oil here? I know demand is higher. To me, this looks like a continuation pattern to the downside. And I think eventually we'll base out and turn to the upside. Give it some time. TTF gas up 2%. So that looks like it's trying to turn back around. The volatility here is amazing, guys. Just absolute massive volatility. Net gas down a little bit. Bloody nose. Looks like we could continue higher. That's a continuation pattern, that small little profit-taking day. So I think we'll eventually grind on up out of this base that we've developed here. XOP, yeah, me, right underneath the neckline still. So we've got strong resistance right where we're at. This is a inverted head and shoulders. We don't have much selling pressure here on a monthly candlestick. You can see the three little guys and the big upward move. That is generally bullish. We're just waiting for crude oil to basically turn around here. So again, we're just hitting up against resistance. And again, it's a game of patience and being emotionally stable and just sitting and waiting for it to appreciate. OIH was up 0.67%. So, XOP and OIH. OIH was up, XOP was slightly down on crude oil being slightly down. That is exactly what we want to see. We want to see outperformance or about the same performance in a very strong sector. So this is showing strength, even though crude oil has been weak. It really hasn't fallen very much. You can see we're kind of basing out right where we're at. Sprott Uranium Trust down a little bit. We could see a little bit of a downward move. It's possible, but again, this sector is so volatile. I would not try to trade this. I would just be sitting in it, waiting, basically being patient enough to just let it make me money. URA up a little bit, not a reversal candlestick, just kind of sitting there. Some people call it an island reversal. Not really what I've seen. We'll see where we go. Uranium also heading higher. It looks fine. URNJ also heading higher. Looks fine. Again, I wouldn't trade this because it's kind of, I would have traded here and then wrote it up, and then usually guys take profit here if it's a short-term trade. I'm in it from, I've been buying down here. I'm riding this whole thing up. I don't know how you could beat that, but that's my approach. And right now it still looks good, and I would just be riding. TAN down a little bit. This guy could turn around. We got yields that are being held steady. We'll see what happens here. I'm not really playing this. COPX down a little bit, down 0.6%. I would be looking for a potential move higher soon, or maybe we tap off the 30. But again, I'm with a pattern like this, which is a double bottom. You usually break the double bottom. You get a return move. It's possible you get another return move, and that would be an excellent entry point, in my opinion. Lithium down a little bit. Are we going to head a little bit lower, or are the rates dropping going to send this thing higher? It could send it higher. I mean, again, I'm not a lithium expert. I follow it. The charts, we've got a big basing pattern that we could potentially do a retest on, but again, I wouldn't jump in front of this yet. There's too much momentum to the downside. We need to base out first. REMX, someone had asked me, what does REMX look like? This doesn't look that bad. I think if gold surges higher, I know rare earth metals went up last time gold and silver went up. So this still looks bad, don't get me wrong. There's still momentum to the downside, but I want to see if this tries to base out here over the next few weeks and starts to try to turn if yields pull on back. Yields have put a lot of pressure on gold and silver. They've put a lot of pressure on some of these commodities. And if yields reverse, we could see some of that pressure come off. So that's what I'm looking for. The S&P 500, it's up. It's up. The pressure came off a little bit. Now, I don't think this looks necessarily fantastic. We are still underneath this. We got to break kind of back above, I'd say, this guy up here. So it's going to take some time. But we were up today, and it was a pretty strong showing. Same with the NASDAQ. We broke back above that trend line with a pretty strong candlestick. And we'll see what happens from here. Hopefully the momentum can continue. I'm not anti-NASDAQ. I'm not anti-S&P. And it's much easier to get the fund flows coming back into the market, even for uranium when the stock market's going up. KRE looks like we're trying to break through this resistance line. We'll see if we can punch through it here. Lower interest rates, more borrowing, more money being made in regional banking. So again, the way that I view this is an accumulation cylinder, 1, 2, 3, 4, 5, 6, 7, being driven by the real estate market. This could be a big move to the upside in bank lending. I know that sounds weird. I get it, but that is what it's suggesting. Emerging markets likes the weaker yields. I know the dollar was sideways. We could see a resurgence of emerging markets, another one to watch. And we could put maybe a nice little pattern here that is kind of squeezing up there. XHB ripping it. You know that there are a gaggle of millennials that want to buy homes. They are priced out of the market. Now, if we get relief in the 10-year, which would correlate to mortgage rates, I think that home building could really take off. This here is your 1, 2, 3, 4, 5, 6, 7, and then we could see a break to the upside. That is your accumulation cylinder in your XHB Home Builder ETF. If you're interested in playing this, I do have some ideas around home builders that I released during the midweek update that I think might do well. If you are a contrarian and you want to play the home build, and I know people are so bearish on it, but that's when you make money. You make money when everyone's bearish. The chart patterns actually look fantastic. But I've got some ideas around that, and you guys can check it out on the website. Moo down a little bit. Is this trying to base out? Again, I got to see some buying pressure. Give me a nice big bullish engulfing or a candlestick that's got a little wick at the bottom, a little hammer candlestick bullish engulfing, whatever it is. We're still trying to base out here in Moo. Again, we could come all the way back down to 68, 69, which is a possibility. What generally happens, and I'll just try to call it right now, is you might get like a wick on the bottom here and then it trades back up and gets everyone scared. That's when you want to get it, is when that wick is being developed. That is how you can buy a potential bottom, is buying a wick. It's like a washout sale or washout selling pressure where people get washed out and it dips down below and then comes back up and you buy it as it comes back up. And that's generally indicates a end of trend move. You'll also see that at top sometimes where you get a big wick at the top where it gets a gigantic wick at the top there, and that's where you sell if you can time it, which is very difficult to do. Looking at copper futures are still holding sideways. I want to be bullish on copper, guys. I really do. We're just waiting for this to decisively break up or down, and that's what I'm waiting for. Iron ore looks fantastic. You can see this little bloody nose continuation pattern to the upside. Iron ore looks very strong, and I think we are going to continue higher. As weird as that sounds, and this could also be almost like an accumulation cylinder, like 1, 2, 3, 4, 5, 6, 7, and then we rip. Potentially. And we're seeing that with the regional banking. We're seeing that with the home builders. And tying it all together. So that looks good. Nickel's still down. Again, I wouldn't touch it until I start to see a green army show up. We have weird trading going on here. We've got aluminum. Aluminum is looking stronger. We get these little red candlesticks next to these big green ones. That generally spells a move to the upside. Again, I've got some aluminum plays on the website if you guys want to play aluminum and play this setup right here. Baltic Dry Index, it's pulling back, and I think that deals with Newcastle coal because coal's pulled back. Iron ore and coal are the two big drivers that Baltic Dry Index, the dry bulk shipping companies, they move. I think this is an opportunity. We've got the falling wedge, we've got the breakout. I like it. I like it quite a bit. And we can also draw almost like, like a big kind of like expanding wedge going on here almost. Newcastle coal down a little bit. I think we could hit this down here at low 100s. That's going to be a huge opportunity. Natural gas was broken to the upside. Coal's going to follow it, I think, to some degree. And this is a good area to be looking at a potential accumulation zone for those that are long-term patient investors. There's some coal companies that are paying 10+% dividend yields. Who needs a CD when you can get upside exposure to coal and your pocket's filled with 10% dividend yields? The same thing is happening with oil companies. Some of these oil companies are paying 10% plus dividend yields with a bunch of upside potential. Hey, I get it. You don't want lower back pain from $100 bills in your pockets. I get it. BTC looking quite strong still. I don't see selling pressure here. With yields going sideways, we could start to see this fire on up. And, I don't really own the crypto space, but it looks good, guys. I mean, this is your you can draw a horizontal resistance here. Right there. You see that? We hit it here. We hit it here. We were almost tapping it there. We tapped it a few times here, here, here. That zone is a good resistance zone. And what do we do? Well, we popped on through it, and the selling pressure really isn't there. This is basically a flag pattern that we've got, which I consider to be bullish. I think we're going higher. With yields not going up, I think the speculation in this is going to come back. You can see Ethereum moving up too. So crypto, as weird as it is, it doesn't look that bad. It actually looks quite good in the short term. And we'll see if the buying pressure comes back, guys. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. If you guys want to know how I'm playing some of these sectors, you can subscribe to the website. Discount is the coupon. Well, spooky, one last day. Spooky, that's it. One last day. That's it. You can see the discounts below. I've opened it for one last day, and that's it. Okay? Because I had some people, it didn't work at some time. I'm like, all right, I'll open it for one last window. That's it. We've got a question and answer session coming up at 5 p.m. on Sunday. So Sunday, if you want to ask me questions directly, we are going to go over a couple of things. We're going to go over how I'm the allocation of my portfolio and where we're at in this cycle and what my thoughts are around some of this stuff. What sectors provide the best risk reward opportunities, and we'll continue to look at companies and I'll provide my opinions on the companies. All right, guys, we'll catch you later. This is Finding Value.